Hey everybody, ready for 401k here. Sorry, I had a little hiatus. Dealing with some stuff outside of the charting, but here I am. Wanted to give a quick little morning kind of observation on our girl MVIS. See what's going on. Just kind of you know resistance, the formations, and ideas that I have here. Just kind of keep an eye on it. Make sure that we're protecting ourselves, but also not reacting. So, MVIS is staying within the channels they've trended out before on logarithmic scale and whatnot. But the interesting thing is that we have to always consider the other kind of technical formations that occur that computers are trading off of, and they recognize the stuff, and even technical traders are trading off of. So we do actually have a cup and handle formation that is forming out, and it appears that we are in the handle formation itself right now, as you can see. So typical handles, they can retrace up to about 40%. You don't want to see them go more than 50% of price action. So what I have going on here is I pulled off of our low for retracement to our high. And this is cool because right now we are actually sitting, so 2065 is our 25% retracement. Now, the shorter the retracement, the more powerful the trajectory out will be. Okay, so we bounced off of that point yesterday. So 2061, right? So that's in the plus delta realm of acceptance there. So we had bounced off of the 25% retracement, and the market didn't necessarily like going that low. But looking at the pre-market here, we're at 2071, so we're coming back to revisit it. If price is going to break through this and drop down, we'll test that level a few times through the day. So as we can see here, so looking at around the 10th. All right, so 11th, 9th. So we can see that yesterday, first thing in the morning, we tested it. We were within range, right? And then back here on the 7th, within range. Where we are right now, pre-market price, coincidentally, was our low yesterday morning, exactly like within a penny, and then within a penny on our low, or 2 pennies on the 7th. Okay, so this is a point that we're looking at to see if we bounce again, because we're going to have one, technically two, technically three bounces. If we come back here again and hit it, then most likely we're going to do it's going to be this sort of kind of trajectory, I guess I should say. So if we open up the morning here, we could expect that we're going to have some sort of bounce up. And here we'll even do this. There's different layers inside of this formation, and probably right around there. Looks about right. Okay, so if we do it again, we open here, fill the gap. It could hit this, and then that's our breakdown. Okay, if it occurs, right? If it hits this, it also has a potential of kind of going up. All right. So this is just what we need to keep an eye on, is if we hit this point here. So if we stay within the realm, so plus delta here, a few cents, around our sorry, I'm trying to lose my mark here. Back out to the daily. Coffee hasn't hit the veins. So if we hit our 2065, so within a few pennies of that, and we don't see the price kind of break above this little kind of downtrend. So kind of go back up in the $21, 21.50, like kind of getting back up in there. Then we could very well then be breaking down below that. That's where we start revisiting, historical kind of support and resistance points, and kind of work our way down. I think things are pretty solid right now. It's not doing a drastic fall. Looking at the candle formations, it's not. They're not forming on the bottom end of the candle. There is more buying pressure behind it. So I don't think the market wants it to go that way. So we'll be looking around 1975-ish as a support. We'll be looking around 1920, and then we'll get down to 1896 if we break below 19. And we always got to remember there's these psychological barriers. Typically, they reside around a 75-cent mark, a 50-cent mark, and then prior to 50 cents, you'll actually get down to the dollar. So there's this weird range from, like, just as an example, like $19 to $19.50. In between that, you don't typically get too much resistance and support psychologically. It's usually the 50, the 75-cent, and dollar mark. So anyways, just real quick, hopefully this isn't confusing anybody. Get all these lines out of here. The reality is this is kind of what we're looking at as the potential for the day, just seeing how this is kind of rolling down. But we do see cup and handle formation, and we do see that it is respecting kind of retracement points. So if it continues to do so, in my mind, the lowest I truly see this going would be the 1896, the 40% retracement before trajecting out. As you know, I like my whole moving averages. I don't see any action like this occurring. This is ridiculous. Looking at the candlestick formations, that it's not screaming this to me, because the whole moving average is staying really, it's hugging it. So what I would imagine worst case scenario is that we do come around that, okay, and work our way out. Whole moving average would work, it would round over, and then it would curl up, a little duck bill. Okay, so this is kind of the idea that I see this going on worst case scenario. But with this moving, it could also support a little more upwards pressure. Okay, so today could very well be a good day, and this goes up like that. We see the whole moving average curl up with it. All right, so I just want to give you an idea of the obviously the two ways it can go, either up or down, but what we're looking for right now with this little retracement, because we know pullbacks happen, they're necessary. We need them fundamentally and technically, we need them to happen for price to continue to move in the upwards trend. Anyways, comments, questions, whatever it may be, you can leave them. You can always visit us over at moneyvikings.com. Great information over there. And we'll see you guys on the next one. Happy trading.